Hello ladies and gentlemen, I'm Joseph Norwichkov, Senior Analyst at GDMFX with today's morning outlook. Briefly, we're going to start with the Japanese yen. A gouge of the Japanese currency climbed to a 5-week high as investors sought a haven after crude oil, of course, slumped, and of course Russia raised interest rates. The US dollar weakened before the Federal Reserve starts a 2-day policy meeting. In result, of course, what we saw yesterday, the yen gained 0.4% to 117.34 per dollar after strengthening 0.8%. Moving to Australia, slightly over there, we saw the Australian currency touched the lowest level in more than 4 years against the greenback. After, of course, the Reserve Bank over there said the currency needed to weaken to achieve balanced growth. The Aussie declined to 82 cents earlier today before rallying 0.2% to 82.28 from yesterday. The European stocks were little changed as, of course, investors weighed the prospects for further stimulus on signs the global economy is faltering. Of course, while we saw the energy shares fell for 7th day. The stocks, Europe 600 has climbed 7.9% in the past 6 days, dragged down by the energy shares, after rolling 13% from this year's low up to almost 7-year high on December 5. The benchmark gouge has retreated to its lowest level since October 20. The share currency is right now unchanged at 1.2470 versus the USD. Moving to UK, the currency over there, sterling, is also steady below the 1.57 level as the Bank of England introduced measures to limit risky mortgages at the FSR in June, citing the need to shield financial stability from risk posed by residential property. A review of the home lending market has also tightened criteria. This is before today's report for housing price index, retail price index, producer price index, and consumer price index as well, all with mid to high volatility expectations. Moving to commodity sector, a lot of interesting things. Gold rebounded from the biggest one-day decline this year before, of course, the Federal Reserve begins a 2-day policy meeting to assess the timing of interest rate increase on slumping energy prices. And of course, what we see, signs of an improving economy. Gold for February delivery declined 0.8% to $1,197.80 an ounce after sliding 1.2% yesterday. A 5th day of loss today would be the longest losing streak since November 6. Assets in the SPDR Gold Trust, the largest bullion-backed exchange-traded product, resumed decline yesterday after posing the first back-to-back weekly increase since July. And of course, yet again, crude oil is falling below the $55 a barrel area for the first time in more than 5 years. This, of course, is on speculations that U.S. producers may further increase output, as of course they battle OPEC for market share. West Texas Intermediate futures dropped as much as 2.1% after closing yesterday at the lowest level since May 2009. And what we see also in US, crude drillers are benefiting as costs fell almost as quickly as prices, according to Goldman Sachs. That's all for today. Thanks a lot for your attention. See you soon tomorrow.